in the next 5 to 10 minutes, I'm going to show you how to turn your account from this to this. Remember, when I started trading as a beginner trader, there's nothing more I could care about unless it is growing my $20, $30, $40, $50 account into $200, $300, $400, or even $1,000. And to be honest with you, that never happened until later on in my trading career. And in this video, I'm going to show you what is it that I can do right now if I want to grow my small account from $50 to either $500 in a month or less. So the first thing that you need if you want to grow a small account is a strategy, right? You need a strategy. There's no way that you can grow a small account, or there's no way that you can become profitable in the market without a strategy. You need a strategy. You need to follow something that is written down, that something that you can be able to see clearly. Because if you don't have a strategy, you are always going to be guessing the trade. And the worst thing about guessing a trade is you're not confident enough on if this trade is going to go in my direction or not, right? So if you are following a strategy, you know that my strategy is back tested. It wins like 60 to 70% of the time. When you lose like 1, 2, or 3 trades, you are not going to change the strategy because you know that there is a chance of losing 3 trades, 4 trades, 5 trades in a row. But if you are guessing trades, you are going to be switching from anything to anything because you are never sure about what is going to happen next because you don't have a strategy. You are just guessing the trade. So if you want a strategy that is very profitable, that can be used to grow a small account, make sure to keep watching because somewhere in this video, I'll give you the link so that you can go and watch that video and watch the strategy that I personally use whenever I'm trying to trade a small account. Then tip number 2, which is the most important tip when you are trying to trade a small account, this is the most important tip, is use huge risk to reward ratio. Listen to me. When you are trading, each and every trade that you place, you have got a 50-50 chance of either winning or losing. So whenever you place a trade, from your point of trading, there is always a chance that the market can go in a buy position for the next day, or there is a chance that the market will go down for the whole day, right? So what I mean is, from any point in the market can move from there to either up and or to either down, right? Sometimes it goes in a ranging market, but there's also those chances where the market is going to go from your point of entry to the uptrend totally from where you entered the market. So what I'm saying is, whenever you are placing a trade, you need to have a big risk to reward ratio. There's a chance that the market sometimes will go 5 times your stop loss, 6 times your stop loss. So whenever you put your stop loss like 20 pips, make sure you get like 60, 70, 80 pips from that trade, right? There is chances that the market can range and hit your stop loss, but also there is chances that the market can go directly in your direction and go for a very long way. So we want to get those few opportunities, but be able to capitalize those small opportunities and make as much money as possible. So when you place a trade, when you put your stop loss, like if you risk $5, make sure you take like $30, $20 from that trade, because this is a small account anyway. So if you want to try and do 1-to-1 risk to reward ratio, your win rate is going to be around 50%, but you are not going to make money because each and every trade that you place can either win or lose. So if you win 50 and lose 50, if you are using 1-to-1 risk to reward ratio, there's chances that your trade is never going to go anywhere. So when you're trading a small account, you want to make sure that that one good trade that you get can multiply your account. So for example, if I have $50 and if I'm risking $5 per trade, if I'm risking $5 per trade to make $20, that simply means each and every winner that I get can cover up another 4 or 5 losses that are going to come. So at the end of the day, if my win rate goes to 50%, I'm always going to be in profits. So make sure you cut your losses early, and then number 2, make sure you let your trades run as much as possible. You don't have much opportunities because you have a small account, so let your trade run as much as possible. Tip number 3, which is very controversial, is do not try to flip that account. right? I've seen a lot of people trying to grow their small account, and the first thing that they think of is flipping that account, just placing 5 trades or 6 trades at once, and then if the market goes in your direction, by any chance you are going to double or triple that account. Well, that can work very, very much, but the problem is you're always going to get that one chance, right? You are giving yourself one chance, because if you place 10 trades on a $20 account, that simply means if the trade goes against you with like 5 to 10 pips, there's chances that you have already wiped out all that account. So you always have one chance to trade. But think about this: if you have $20 in your account, and then you say, okay, I'm gonna be risking $3, you are always going to get 6 chances that if the market doesn't go in my direction at once, I can get another chance, and you only have 6 chances to make that happen. So it's far much better for you to place those small trades, and then do not try to flip the account. Account flipping for me doesn't work, because I don't want to be gambling. I don't want to lose my whole account with one trade. So make sure when you are placing that trade, you are sticking to the strategy, you are sticking to risk to reward ratio, and you are placing, like, you are giving yourself like 3 to 4, 5 chances of making something happen following your strategy, right? Tip number 3 is use one time frame. Yes, how many times have you entered into the market thinking that, okay, this is a downtrend, let's say on the 5-minute time frame, and then you place your trade, and then your trade run for a little while, and then you go to the higher time frame and you start seeing some big green candles, and now you are thinking, okay, maybe the market is now on a is in an uptrend in the higher time frame, so I have to close the trade. And now you end up switching from things to things, which is something that you never want to do when trading. So the best way is just stick to your one time frame. If you are trading the 5-minute time frame, stick to that 5-minute time frame. The problem with moving from time frame to time frame also comes when you want to change the lot size, you want to change the number of pips that you can use, the position size. Some people will end up getting confused. So if you are using the 5-minute time frame, stick to that 5-minute time frame. Tip number 4 is find a pair that you understand and marry that pair. What I mean is stick to one pair or one partner, right? So what you want to do is you want to make sure that when whatever you are doing, you are sticking to one trading pair and one strategy. So for example, if you are trading synthetic indices, you can stick to volatility 75, or you can stick to boom and crash, you can stick to volatility 25 or volatility 10 index. You don't want to be, today you are trading Nasdaq, tomorrow you are trading Euro USD, tomorrow you are trading synthetic indices, tomorrow you are trading Bitcoin with that same account. No, because these markets have different behaviors, and you need to understand one market and understand how it works. So if you follow these 4 tips that I've given you today, number 1, find a profitable strategy which is back tested and stick to it, right? I will leave the link to the strategy that I personally use down below in the description. Number 2, use huge risk to reward ratio. Whenever you are risking like $3, $2, make sure you make like $20, $25 from that trade. That is going to help you very, very much, because remember, there's always going to be the loss coming. So if the loss comes and then you are risking small, and if the win comes and then you are making more money, that simply means at the end of the day, your profits are going to be bigger than your losses, and your account is going to be above where it started. Even if you don't get much wins and you don't get much of the profits, but if your risk to reward ratio is big, you are guaranteed not to blow that account, unless if you lose 10 trades in a row, which is very unlikely, because for most of the strategies that I've been back testing, you can get 3, 4 or 5 losses in a row, but getting to 10 losses in a row, it's very rare, because the market always gives you a 50-50 chances of going in your direction or against your direction. So once you have this, you need to write this down. You write your trading strategy, you write your risk management, you write your time frame, you write your instrument that you want to be trading, and these things that you write down is gonna come out as your trading plan for that small account. So go ahead and do these things and come back here and thank me later. Thank you for watching. I will see you in the next one.